He was a strong and friendly fella with the name of Campanella. He was someone special, I could see right off the bat. There was something.
Webcasting from the Little Bell Publishing Studios in Rockton, Illinois, this is the Mortgage Messenger with host Jim Campanella. Welcome to the Mortgage Messenger for the week ended August 6th. This happens to be our 13th Monday broadcast, so we've been broadcasting now for one quarter of the year. So it's sort of like an anniversary issue, or an anniversary blog here. So with that, why don't we begin? And now, the week in review. Last week, like every week in the past lately, I'm just repeating myself, rates are low. They're very low. Take advantage of the low rates. Any news coming out is just going to cause rates to go up. They're not going down. Take advantage of this. I know I'm repeating myself here, but one of these days I'm going to be right. Rates are going to start going up. This week the Fed's meeting on Tuesday. Tomorrow, there's no indication that they're going to be raising rates or anything of that nature, but depending on what they say at that meeting, it may cause some instability in the market and rates can go up. So based on that, if you're floating, lock your loan. This week's tip of the week is going to be a little different than a tip of a week versus more of informational. It has now been passed, and it's going to happen on September 7th. Anybody who gets an FHA case number, an FHA identification number, account number, whatever you want to call it, on September 7th or later, are going to be affected by the new rules on how they compute the MIP. Currently, the upfront MIP on an FHA loan is 2.25%. So on $100,000, 2.25% or $2,250 gets added to the top of the loan. Along with that, your monthly MI is 0.55. As of September 7th, it changes. Up front, you're going to be paying 1 point. So on $100,000, you're only going to pay $1,000 rolled into the loan. That's good news. But on your monthly MIP, it's going to go from 0.55 to 0.9. And it could go up from there. It's going to go 0.9 initially, but they're authorized to go up all the way as high as 1.5 monthly. So what this means is on a $200,000 loan, as of September 7th, if you get a loan September 7th or later, or apply for a loan September 7th or later, it's going to cost you $58 more a month to go for FHA, even though they're lowering the upfront MIP, because the fact that the monthly is basically doubling, it's going to cost you $58 more a month for a $200,000 loan. You could divide that in half for $100,000 or figure it out accordingly. So the news about FHA changing their pricing or changing the cost of the MIP is actually going to cost you more. It's going to be a fundraiser for the government. They're calling it sort of like a housing tax, even though it's not called that. In effect, that's what's going on here. So if you're looking at locking a loan, again, rates are low. You may want to consider doing it before September 7th. After September 7th, it's still affordable. It's still a great program, but it is going to cost you more. Your effective rate or your APR is going to be higher even at these low rates because of those changes in the government. So I can see by the clock on the wall outside our studio windows that our time is up. So thank you for viewing the first 90 days of the Mortgage Messenger, the first 13 weeks that we've had, and I look forward to speaking to you again soon. Thanks.
I can't forget you, Campanella. You're still the MVP within my heart. You're still the MVP within my heart.